Imagine if you could invest in Ethereum effortlessly. No crypto wallets, no recovery phrases, and no hackers to worry about. Sounds dreamy, right? That's the magic of Ethereum ETFs. But here's a twist you may not expect. Some experts argue that Ethereum ETFs could surpass Bitcoin ETFs in importance. Why does that matter? Because Ethereum isn't merely digital money. It's the backbone of countless decentralized applications, NFTs, and the future of finance. In this video, we'll dive deep into everything about Ethereum ETFs. We'll clarify what they are, how they operate, why Wall Street craved them, hidden risks, and if they're actually worth investing in. Let's jump right in. Before we tackle Ethereum ETFs, we must understand Ethereum itself. Many people think Ethereum is just another cryptocurrency, but that's a misconception. Bitcoin was designed mainly as digital money, while Ethereum serves as a full-fledged decentralized computing platform. Picture Bitcoin as digital gold and Ethereum as a decentralized version of the internet. Developers can create apps, banks can tokenize assets, and people trade cryptocurrencies without traditional exchanges. The fuel for this thriving ecosystem is Ether, or ETH. Whenever someone uses Ethereum, transaction fees are paid using ETH. Increased usage means greater demand for ETH, making it more than just another cryptocurrency. Now, let's explore what an Ethereum ETF really is. Instead of purchasing ETH directly, you can invest in an ETF through your brokerage account. An ETF, or exchange-traded fund, is simply managed on the stock exchange. When you buy shares, the fund buys and secures Ethereum on your behalf. You won't need crypto wallets, private keys, or exchanges anymore. Essentially, buying Ethereum becomes as simple as purchasing an S&P 500 ETF. For countless investors, this simplicity is a game-changer and why traditional firms jumped into Ethereum ETFs after regulatory approval in the US in 2024. But did you know not all Ethereum ETFs are the same? Two major types exist: spot Ethereum ETFs and futures Ethereum ETFs. Spot Ethereum ETFs actually own Ethereum. If Ethereum's price rises, so does the ETF's value. It's like having direct exposure. On the other hand, futures ETFs buy contracts that may expire and require rolling over, leading to added costs. This often means futures ETFs can fall behind the real Ethereum price over time. For long-term investors, spot ETFs are generally simpler to understand. So, why did Wall Street want Ethereum ETFs? When Bitcoin ETFs debuted, they attracted billions. Investors sought crypto exposure without the hassle of managing digital assets. Ethereum ETFs addressed that need. With them, pension funds, wealth managers, and financial advisors can purchase Ethereum through familiar accounts. No new wallets or tech skills required. Now, let's talk about the benefits of investing in Ethereum ETFs. Firstly, simplicity. Buying through a brokerage is very straightforward. Secondly, security. You'll avoid the hassle of private keys. Third, regulation. ETFs are part of traditional markets, making investors feel secure. Fourth, tax reporting becomes much easier. Lastly, it provides portfolio diversification, giving investors an opportunity to tap into a different asset class. But let's not overlook the risks tied to Ethereum. First, it's highly volatile. Price swings of 20% or more are common, so if you dislike volatility, Ethereum might not be for you. Secondly, owning an ETF doesn't mean you own the actual coins. You can't use that Ethereum for DeFi, staking, or NFTs. Thirdly, be mindful of fees, as they can degrade long-term returns. Lastly, regulations may change, impacting Ethereum's price and ETF demand. Many wonder, how do Ethereum ETFs compare to Bitcoin ETFs? While Bitcoin is seen as digital gold, Ethereum acts as the operating system of decentralized finance, powering everything from smart contracts to tokens. Some investors opt for both as each serves a unique purpose. So who should consider Ethereum ETFs? They might be ideal for those wanting crypto exposure without the hassle, especially if you're familiar with brokerage accounts and comfortable with crypto's volatility. However, they may not suit investors seeking stability or guaranteed returns. In conclusion, Ethereum ETFs represent an essential bridge between traditional finance and the cryptocurrency realm. For years, investing in Ethereum meant managing wallets and exchanges. Now, you can explore this asset using standard brokerage accounts. Keep in mind that while ETFs are simpler, they don't eliminate Ethereum's inherent risks. If Ethereum's value dips, so will the ETFs. Understand your investment goals and risk levels before diving in. If you found this video helpful, please like, subscribe, and turn on notifications. Also, comment below whether you'd prefer investing in Bitcoin ETFs or Ethereum ETFs and why. Thank you for watching. See you in the next video.